Hello and welcome to the webinar. My name is James Hughes, Chief Market Analyst at GKFX. Thank you very much for your time today. Thank you very much for giving us your lunchtime or whatever it is that you're giving us at the moment. Today's webinar is called Top 10 Trading Tips, or it's around that. It's kind of we do have 10 tips that we will give out to you, but there's a lot of, obviously there's so many trading tips around the world. There's so many different things that you will read where people will say, oh, you should do this, you should do that, you shouldn't do this, you shouldn't do that. And if you were to follow everything that you ever read, then you'd have huge you'd continuously be reading this stuff and never actually placing any trades. So it's important to look at take this sort of information that you get with not with a pinch of salt, but try and read it sparingly, because it's like the textbooks. It's like anything, you can overanalyze yourself. Anyway, let's get started with the hopefully everyone can hear me here. Within the webinar software you do have a questions pane. Feel free to ask any questions that you would like, and we will try and we'll answer as many as we possibly can. Just bear with me 1 second. I'm just going to mute you for 1 second, just while hopefully you can hear me. Can you just all confirm that you can hear me? It seems like there might be a slight issue in here somewhere at the moment. Can you just, within that webinar page, can you just confirm that you can hear me? If you can, then that's great. If you can't, then obviously that's not great. By the looks of things, everything looks okay. Can everybody hear me? If you could let me know, that would be fantastic. I'm a little bit worried that nobody can hear me, so and you should be able to see my screen. You should be able to see. Can everybody hear me now? Can you hear me? If you could just confirm whether you can hear me or not. Typically we have got issues with the system as ever. There is a questions pane in there, so if you can hear me, if you could just write down that you can hear me, that would be perfect. If you could just confirm that you can hear me. If you can, then perfect. And there is a questions pane in there. If you can hear me, please write in that questions pane. If you can see, yes, okay, perfect. Okay, that's great. That's all I needed. Oh no, you can't hear me. Oh, for God's sake. Why can you not hear me? Now you can hear me, I'm sure. If you can hear me, please say yes on the software. Hopefully you can hear me. Yes, fantastic. Finally we're there. The wonders of modern technology. Okay, perfect. Let's get going. Thank you very much. Let's get into it. Hello, welcome to the webinar. My name is James Hughes, Chief Market Analyst at GKFX. Thanks for your time. Thanks for joining us this morning. Very thankful of you joining us. You've seen the questions pane, which is great. If you do have any questions as we go through, then please put them through there, and I will try and answer as many as I possibly can. Today's webinar is called 10 Trading Tips, and it is, as we said, as it says on the tin. It is 10 trading tips around the markets. Now, as I was saying before when you couldn't hear anything I was saying, but it's there are so many bits of information like this on the internet that you should keep an eye on, that you should look at. But again, don't bog yourself down with this sort of information, because okay, obviously this webinar is incredibly helpful and will be incredibly helpful to you going forward, and you will hopefully learn a lot, but this sort of stuff can very much bog you down. It can get on top of you, and you can read so many things where someone says what something is good news, something is bad news, something is good, something isn't good, a whole host of different things. So you should just keep this information sparingly. Someone's asking me, there will be a PowerPoint with the 10 things on it, but there won't be anything else. I will talk around the rest of it. There will be a recording of this webinar as well for any of you that wants to watch the recording. The recording will go on the website that you can see in front of you at the moment. So it will go up there in the video articles section of our Market Insight website. As I said, ask any questions you do like. But as I was saying, yes, so don't let yourself get bogged down by this sort of information. There will be a number of different things that you should look at and you shouldn't look at. But if you look for long enough, you will always find contradictions within all of these bits of information. So just make sure that when you look at this, when you trade, that you don't overcomplicate yourself. Overcomplicating things is the biggest thing that is probably the most common mistake that people make. And I'll just show you an example of that quickly before we even get into the top 10 things. But this is a chart. This is the MT4 chart. The amount of times that you look at charts and you speak to people and they come in for webinars or they come in for seminars, and we look at various different people's information that they have on here. And you'll find someone will say to you, "Oh, can you look at my chart? I've been having some problems recently. I can't find I find that my decisions aren't great. They're not working as they should be. So I have a lot of problems with that." And the amount of times I see a chart that looks exactly like that one that is there on your screen right now, that is absolutely covered in every kind of indicator there is possible. It's just full of Ichimokus and channels and trend lines and Fibonacci's and all sorts of different things. Now we're all guilty of overcomplicating things sometimes and putting too many lines on our charts, but make sure you don't overcomplicate trading. It's such a complicated subject anyway, and it's hard enough to do without anything else. So just make sure you don't overcomplicate the situations. Anyway, let's get on with this and look at get going for our trading tips. Now there is a PowerPoint, and I will just put this up in front of you right now. Oh, and typically that hasn't put that on the right screen. Okay, right. We may have to do it this way because I had to change that over. Anyway, let's look at this as we go on. The first one, the most important thing that you can look at. Sorry, these aren't in list of importance. First of all, from 1 to 10, they aren't. 1 is most important and 10 is least important. They are all of equal importance, but they give you some information about, just some basic information about some of the things that can help you out when you're trading, and basically what some of the more successful traders do. Not necessarily anything else, but what successful traders tend to do to be able to help themselves trade. So first of all, the first one we have here is treat your trading like a business. Treat your trading like a business. Now that's obviously sometimes easier said than done, and of course a lot of people don't necessarily have the they don't have the time to do something like that. But the majority of people that will do well from trading and won't blow their account up within a week, or um, won't necessarily uh, uh, trade in a too much, or over trade, or do anything else, are the people that treat it like a business. And I'm talking about this from a monetary value. I'm talking about the money you have in your account. Treat that money in your account like you would treat the money in a business account. I'm sure some of you online here have own your own business and work in your own business, but it's keeping that, being as organized with your trading as you are with your business. Note things down. Make sure you've got the right software for what you're doing. Make sure you've got the right information in. Look at all of the trades that you do. When you place your trades, make sure what you're doing is relevant to a strategy. And one of the key things is, when you start your own business, is having a strategy. You should have a strategy of what you want to trade. If not what you want to trade, when you want to trade, what markets you want to trade in. Don't just approach trading and say, well, I want to make some money on trading. That's my goal. Okay, great goal, but it's not necessarily going to be one of those that works. So we all want to make money from trading. Otherwise, why would we do it? Okay, it's a hobby. Yes, it's a hobby, but you want to be successful when you do these things. So I think one of the key things is we must make sure that you have a plan, like you would for a business. You do the things, keep to the things that you know. But like a business, when you come out and you place the amount of times you see people who have started a business in areas they have no idea about, and they obviously don't work. Trade in the things that you know. If you don't know them, learn them. Take courses. If you're in a job, you run a business, you'd want to take a course to make sure you're better at accounting, you're better at this, you're better at that. Take those courses. Don't spend millions of pounds on these courses, but just make sure you are fully planned about what you're going to do, and try not to leave these things to chance. And one of those is probably in one of these points later on within the webinar. But treat your trading like a business. Get a spreadsheet, note down when you trade, what price you enter in, where your stop is, where your limit is, come out of the market, and do where you come out of the market, what profit you made, what loss you made. And then you can go through and keep tabs on exactly what you're doing. And it's so important to keep tabs on this. Otherwise, the feeling of the money can become overwhelming, or it can become too much of a burden. Either way, it can be very, very a tough thing to do. So treat your business treat your trading like a business. Okay, number 2, don't leave things to chance. Don't leave things to chance. Now, this one is something quite simple, and some of them you'll find are excuse me. Some of them you find are quite simple points when you come to trading, because it doesn't have to be overcomplicated. But don't leave things to chance. One of the biggest things with trading is psychology. It's a multi-million pound business, trading, and what also is a multi-million pound, billion pound business is psychology within trading, and understanding what you're doing and why you are doing it. It's the most important thing, to understand why you make good and bad decisions. And one of those things is these things can be incredibly easy just to keep an eye on, and to make sure you're doing right. So and once, I'll give you an example. I used to work for a trading company a few years ago, and the prop desk there was a prop desk within there. I didn't work on the prop desk, but there was a prop desk within there. And one day they had a psychologist come in, a trading psychologist come in and trade. Now, I'm not necessarily telling you to do this, because this is a bit of an exaggeration, but it gives you an idea of the kind of level they go to. But what one of the key things did say was, it said, and this was interesting, that the second day of this course that we had for trading psychology, they asked if everyone could either for the next day bring their spouse in, their partner, whatever it may be, bring them into the session, and because speaking to your spouse, speaking to your partner is just as important as anything else. And what they did with that day when they came in, they said one of the most important things you can do to your for trading is to for your husband or partner or wife to be successful at trading is to when they wake up in the morning, do not argue with them, whatever the case may be. If they wake up in the morning and you're angry about something, don't tell them in the morning. Tell them when they get home. If you get up and you for some reason are unhappy about something, whatever it is, or the kids are going crazy, don't take it out on your husband or your wife or your partner, the trader in the family. Now this seems very, very out there and very, very sort of a crazy kind of thing to go by, but it was one of the cornerstones of this trading psychology situation that the course that came in, that when you trade angry, when you are angry when you trade as a prop desk, and these are people that are trading for a living, so it isn't necessarily the same situation, but if you are trading for a living, the worst thing you make the worst decisions when you are angry or when you are under other stress, which is a kind of a natural thing, but not adding to the stress from people at home is a key thing. Now, I'm not asking you to go home and tell your can everyone see my screen, just to let you know? Hopefully you can all see my screen. Hopefully you can see this screen. It's just got the PowerPoint presentation on it. If you can see it, yeah, good. Okay, thanks. Some people saying they can't see it. If you can't, it should be there. It should be up there. So I'm not telling you all to go home and tell your wives or husbands or partners not to row with you in the morning, because that's what trading psychology says. But you can help yourself in other ways. So one of the key things that someone always taught me was that someone first asked me, "Are you a morning person? Do you enjoy getting up in the morning, or are you sort of do you prefer being late out at night, or when are you most productive in your day? When you first get to the office, or late in the afternoon, or what is it?" And I've always been particularly good in the morning. I like being up early, and I prefer that in my lifestyle. However, a lot of people would always say, "Well, no, I don't like being up in the morning." And if you're not trading in an office environment and you haven't got up to go out, then trading, a lot of people obviously will just trade off their laptops, and a lot of people say, "Well, no, I'm not a morning person," but that's impossible, because I have to be able to trade on the UK market or European market early on. If you're not a morning person, don't trade in the morning. And someone told me this previously, and it was a key thing. We were all talking about this situation and said, "Well, that kind of does make sense. You're going to make the worst decisions if you're not good at that time of day. Don't trade it." And everyone would then tell you, say, "Well, I want to trade on this. I want to trade on euro dollar. I want to trade on this. This is when the setup was. This setup was at this point, and that's when it worked better. Look at other markets." Is the answer. "But I like trading euro dollar." Why do you like trading euro dollar? Because it's the most liquid stock instrument out there. Well, for the amount of size, unless you're trading sort of 300, 400, 500 million dollar positions, then you're not gonna. It's gonna not necessarily gonna make a difference. The movements in the markets are just as big in the likes of dollar yen, in the likes of dollar CAD, in those other markets where you can trade at different times during the day. And let's face it, euro dollar you can trade all day, euro sterling you can trade all day. All of these currency pairs you can trade all day. People say, "Well, no, I want to trade on UK stocks." You can do that at other points in the day. If you're not a morning person, don't make your most important decisions in the morning. Very, very simple thing to go by, and it's that sort of things that what I mean by don't leave things to chance. Don't, when you wake up in the morning and you don't like trading in the morning, don't trade in the morning. If you don't like trading at night because you feel tired, or if you feel tired during the day, don't trade at that point, because you're going to make bad decisions. If you just had a row with your wife or your husband or your partner, don't trade them, because you're going to make bad trading decisions. And that's the key thing. Don't leave these things to chance. These are very simple things that you can look at, and they're very, very simple things that you can control yourself. So much of trading is controlled externally. It's not controlled by yourself. You don't know where the markets are going to go. But things like that, you can control, and you will make much, much better trading decisions if you are in the right frame of mind. And everything in trading is about psychology. It's so, so important. Excuse me, the man flu has got me a little bit. Let's move on to point number 3. Oh, you will lose money. You will lose money. This is a God-given fact that at any point in your trading, at some point when you trade, if you trade for long enough, you will lose money. And the most successful traders are traders that know how to lose money. And I'll explain that a little bit in a second, but the most successful people are those who know how to lose money. And this ties into risk management. This ties into a stop and limit situation, which I will talk about, because it is incredibly important. But you have to get ready to lose your money. If you're opening up a trading account and you're opening it up with let's say $200, £200, $200, whatever it may be, 200 euros, whatever. If you're opening up with that money and that is your last 200 euros, your last $200, you are going to be so incredibly emotional about that money that you have in your trading account. So as soon as you lose some money, which, as I'm saying, you inevitably will do, you will feel, your emotions will take over completely, and you will feel totally different about all of the trading that you do, because you don't have, you're not in the same frame of mind with the money in your account. However, if you use your risk management tools, you look at your stops, your limit orders, then there is a easy way that you can just make sure that, yes, you will lose money, but when you do lose money, you're not losing things so aggressively. And I'll give you an example about a trading strategy that I saw once when I was only on just working in the back office in a trading brokerage, and we had a client who came on, and he was trading on, I think it was the FTSE. I think he was trading the FTSE, and this was, I think, over 10 years ago now. And the markets were rallying very, very strongly, rallying very strongly. And he'd put a couple of grand in his account, I think, to start off with. So it's a couple of grand account holder. So not a tiny account, but not a ginormous account. It's a mid-size account, about £2,000, and he was his position was doing particularly well. He'd bought the FTSE, and this was spread betting, so he'd bought the FTSE, a couple of pound a point, £2 a point, or whatever it was, and the market had moved up, and he'd done particularly well. So his trading strategy was that at the end of every single day that he traded, he would double his position if he was doing well. So he'd go in, double his position, market would go higher. Next day, market went higher, did particularly well. Next day, went higher. Market went higher again, doubled his position. Kept doubling and doubling and doubling and doubling his position. Now, he caught this in a very, very lucky time. He caught this as the market was strongly going, trending higher. New 52-week highs every day or so. So the strength was so strong. So he kept doubling his position. At the end of a 3-month period, this guy had turned his account of £2,000 into around, I think it was just over £900,000, just by doing this very similar thing. However, what he wasn't doing is he was on the downside. He was not protected in any way. And he, obviously doing this, being new to trading, he was just making money, being particularly strong and doing particularly well. And at no point did this point number 3 that you can see on your screen come into his mind that he could potentially lose money. Because it was so successful. He wasn't losing money. So what happened is, and inevitably you're going to know the end of this story, but this guy made £900,000 out of his couple of months worth of trading. And then at the end of that, the market turned around, and the market turned. He started losing money, and from having £900,000 in his account to the end of a 2-day period after that, he ended up owing the company I worked for £30,000, and that was all because he wasn't protected. So you have to be protected in the market. So let's just spend a couple of minutes just looking at a stops and limits situation, and just look at where we should place these. So let's just take this cable for a minute. This is the cable chart. Let's just get rid of all of these lines just to make life easier for us. So what we'd look for, and those of you, you must place a stop loss order when you trade. It is imperative for me. If you don't place a stop loss order, that you are risking your money. You have unlimited risk in what you should in what you have in here. Now this is a longer term chart. This is a daily chart we're looking at here. This is a cable daily chart. So it's a very important, a very big instrument, and of course it moves a lot more recently. But let's look at exactly what you should do on stops and limits and where you should place them. The key thing about this point, number 3, you will lose money at some point, is that you will lose money at some point, but you do not have to be right more times than you are wrong in order to make money overall. You can place 10 trades and you can be wrong 9 times, but you can still make money out of your trading. So let's look at exactly where you do this. Let's say for argument's sake we want to go long. We want to buy the market, and we're going to buy it at its current market price, which is where it is now, so around 125.40. So 125.40 is where we're going to buy. So we want to buy the market. We're buying from here. Market's going to go up. That's our plan. We're buying here. We want it to go up. So then we think, let's place a stop loss in there. Let's put a stop in. So what people do is they go, well, how much money do I want to lose on my trade? Well, worst case scenario, I don't really want to lose anything. I want to lose about 10 pips. So they put their stop loss in at that point. Now that, if you're placing a stop loss so close to your entry level on your trade, you might as well not bother placing the trade. You might as well get your checkbook out, write a check, and go and deliver it to your broker, because you will lose that money, and you will lose it incredibly quickly, because the market will sneeze this much, so it wouldn't even register. So your stop is too tight. It's another massive mistake that people make, is putting their stop too tight. And when you ask them, you say, well, why did you put your stop that tight? And the answer always comes back with, I didn't want to lose too much money on my trade, so I put my stop a really tight stop. Now that's not necessarily the way it should be. You have to give the market time to breathe, and ideally we'll put it at certain support or resistance levels. Now those of you who don't know what support and resistance is, it's a form of technical analysis. On the downside you have support. The basis of technical analysis tells you that levels that were important in the past will become important again in the future, and with that point we look at various different areas, and we look for support on the downside. And support would be at the lowest points, or times when the market has tested lower levels and come higher. So if we look at this at the moment, now forget the prices, it's a very long way out, but the downside here, 119.80 is, say, our downside. That is a support level because it's the low. That's the low point of the recent times. So what you would say in terms of a stop loss is you say, okay, I'm going to put my stop below a support level. Okay, below a support level. Now that's a massive gap, so we wouldn't necessarily place a stop below there, but we'd look for support levels on a shorter term chart. So let's look into this chart. So we're going to say support level. I have a support level at this low down here, 124.90. So 124.90, there is a support level. This is where we're entering the market. I'm going to say I'm going to place my stop just below 124.90. Why are we going to place it just below 124.90? Well, because if the market falls, let's just look at this at the moment. If the market falls from here and comes all the way down here, you're losing money all the way down to there, because you're long. You want the market to go up here, but you've bought the market and it started to come down here. Your stop loss is at exactly 124.90. It hits 124.90, but the whole point of the support area is that it will bounce higher and move to the upside. So that's our low point. It's going to come back up and bounce up to here. It's going to stop you out of the market, and you're going to end up missing out on a big position to the upside. So what we do is we put it just below the market, just below this area, because if it breaks a support level, then we have confirmation that has been broken. Okay, then what we say is, okay, that's our stop area, 124.90 on the downside. Then we know that worst case scenario, if this price moves, worst thing I'm going to lose is 55 pips. 55 pips is the worst I'm going to lose. Say for argument's sake we're spread betting just to make it easy, and you've got £1 per point on it. Worst case scenario, I'm going to lose 55 pips. Now if you did that, you then look to take your profit at, say, 200 pips higher, 250 pips target, because we'd always say maybe 3 to 1, 4 to 1 in terms of a risk reward ratio on your trade. You'd say my downside is 50 pips, but my upside is 200 pips, 250 pips, whatever it may be. And that way you can place your trades, and you can say, okay, I lose money. If the market comes down to my stop loss level, I'm happy, because that's where I set it. I set my risk. That's my risk area. That's the worst case scenario I want for my trade. As the market falls down, it will close your position at that lower point, and you'll be out of the market. Yes, you will lose money, but you'll be safe in the confidence that your risk management strategy worked, and you are now out of the market. So placing that stop loss will every single time make sure you don't get in a situation. And remember that you will lose money, and the best traders learn how to lose money effectively and then take that into their for future trading. So that's one of the key points, number 3. I'd say that's probably, once we go through them, I'd say number 3 is the most important one. You will lose money, and you have to learn how to lose money, and that's by putting your risk management stops and limits in place. Number 4, the markets will move whenever they want. The key thing here, and this is a very short one, the key thing here is the markets do whatever they want to do. There's one thing that we all have in common between myself, you guys as traders, me as an analyst, the president of the ECB, Janet Yellen, Donald Trump, whoever it is. The one thing we all have in common is that not one of us has any idea where the market's going to go. Yes, we can place our support levels and resistance levels, and we can say, well, we expect it to do this, and the levels that were important in the past will become important again in the future. They will jump around from this high to this low. Yes, we can analyse the markets, but eventually we don't know where they're going to go. Look at Brexit. Market fell aggressively. Came all the way down, didn't know where it was going to stop, didn't know if it was going to rally. Then everyone thought, well, what are we going to do? Markets are rallying now. They're very strong. And whenever anything is going one way or the other, if something's been going up for a long time, everyone always wants to sell it. If something's been going down for a long time, everyone always wants to buy it. Everyone's always trying to pick the top or pick the bottoms of these markets, and it is one of the most difficult things to do. The markets will move whenever they want, and you do not have a say in it. All you have to do is make sure you are protected when they don't go the way that you expect them to go. Just looking at a couple of questions in here. Someone asking, if the price dips below support mark and then bumps up, so this takes us back to the previous thing we were talking about. If the price dips below the support mark and bumps up again, would your trading stop completely or start once again it goes up? No. If you had a stop loss order down at 24.90, as soon as the price hit that 24.90, you would be taken out of the market. Well, they either hit 24.90 or you might be slipped and you might see a price slightly below that. But 124.90, if it hit there, you would come out of your market. It is then completely closes your position, and it doesn't matter if the market then rallies back up, you are completely out of the market. So as soon as it comes down and hits that, you're closing this, so that's gone, and you're closing this, so that's gone. Now the market is completely empty. So no, there is no it does not do that. Okay, let's get on to the next point. That was number 4. Let's go to number 5. Open up a demo, but don't expect it to feel the same. Now this point goes on demo trading. Now demo trading can be incredibly important to you. It can be so important in terms of for so many reasons, but it will never ever feel the same as when you trade normally. So I'm not saying that demo accounts are a waste of time. I'm not saying that demo accounts are completely and utterly null and void, but they do not teach you how to trade, and that's the one most important thing that we can take from that from whenever you download a demo account. People think a lot of people's strategy is to go, okay, what I'll do is I'll open a demo account and I will dummy trade. I'll learn my strategy, and then I'll go and do it in real life. Nah, it doesn't happen that way. That's not how it happens. That's everyone's best intentions, yes, but that is not how it happens. And I'll tell you why that is the case. When you trade on a demo account, you are trading on demo money. That's the whole point of it. You can trade risk-free. You're trading on money that isn't yours, or is paper trading. Exactly. Someone's saying, is this paper trading? Yes, this is paper trading. Now, what paper trading allows you to do is test your strategies and use the software. Yes. But when you place your trades, and you say you've got a stop loss in, or you've got a limit order in, or you're placing your trade to open your position, your mindset, and again this goes back to psychology, your mindset is completely different from that of when you're trading normally on a real account using your own money. It is totally and utterly different. None of the emotions that dominate trading, none of the emotions that are there when you set a stop, close a position and make some money, or close a position and lose some money, none of those emotions are in there when you're doing it on a demo account. So what always happens, is always the case, is that people will go in, they will say, I've traded on my demo account, then when they get to trading on their live account, they make mistakes, because the way they're thinking is completely different to the way they're thinking when they're trading on a demo account. When your money is at risk, it is so much different to when your money is not at risk. So I would say demo accounts are incredibly important, yes, and I'll tell you what they're most important for is learning how to use the software. Learning how to use your software, and how this and how the MT4 or whatever platform it is, how it works. Making money through trading is hard enough without losing money because you clicked the wrong button, or you placed the wrong you pressed the wrong button here, or you placed the stop instead of a limit, or you placed a limit instead of a stop, or it was euro dollar instead of euro yen, or whatever it was. Learn your trading platform, know where everything is, know how to analyze the charts, know where your account history is, know where I can see my positions, know where you can see how much your margin is. Just learn everything about the trading platform. Yes, place trades. I'm not saying don't place trades. Place your trades through your platform, because you need to know how long it takes. When I'm placing this, how long does it take me to place a trade? Am I going to do one-click trading, or am I not going to turn on one-click trading? Am I just going to, how long does it take me to place a stop? How long will it take me to overall to place a position, to put a full position in the market? All of this information is incredibly important when you trade. So opening a demo account is incredibly important, but do not expect to be able to manage your money in exactly the same way, or be able to use it in exactly the same way. Someone's saying here, yeah, best time frame for index, and trading, finding out what your best time frames are for analysis. Yes, it's perfect for that. And a lot what MT4 has is a backtesting tool, so you can backtest old trading strategies. You can let the computer run it and find out how exactly it works. Yes, that's great, but learn how to use the software. Don't expect it to feel the same as soon as you turn around and you get into trading properly, and when you're trading on your own money. It will feel totally different, and you will make bad mistakes. Let me go back to the support and resistance. Let's look at the support and resistance example again. Let's look at this. So we've got our stop loss in. We entered the market here. If this was a demo account, then you'd be able to look at this and go, okay, market's moving down here. Say the market was coming down to this level. Let's put a line in here, in fact. So market's moving down here. This is where the market's trading. You get down to this level, and you think, okay, fine, that's fine. My stop loss is at 124.90. I'm absolutely fine with that. At the downside, I'll just leave it there. So fine, that's exactly what you're supposed to do. However, that's not what happens when you get to a live trading account. And the amount of times I have seen people do this thing, where they go, okay, let's have a look at this. Just get another line in. Market's moving down. Market is here. It's trading all the way down. I'm worried that I'm going to get stopped out. But I think this is still going to go higher. How many times have we all said that in our head? If we're long on the market and the market's falling down, you go, I still think this is strong. I still think the market's going to move higher. And what we do is we do this. We go in here and we go, I'm going to move my stop down. I'm going to move it down to here. Give myself a little bit more breathing room. On a demo account, you wouldn't do that. Okay? And that's because you're thinking differently. What you do on the demo account is the best way to do it, because you're taking emotions completely out of your trading. But on a live account, you'll move that. And the amount of times I've seen that, moving your stop. Worst thing you could do what you're doing is you're saying to yourself, the decisions that I make now are better than the decisions that I made when I wasn't emotionally thinking about how much money I'm losing. Obviously, you make much more money. You make much better decisions, but before you've got any of your emotions in there, you've much better decisions. So once the price is trading down here and you're thinking, oh God, I don't think this is going to happen, I don't want to lose the money, don't move your stop down to here, because what will happen inevitably is this, and it'll extend, and then you're losing more money than what you wanted to. You're losing more money than what you're asking for. I'm just going to go through some of your questions, and again, this comes back to some what we said again before about the most successful traders know how to lose money, and the best traders in the world are the ones that take emotion completely out of trading. Unfortunately, none of us can do it because we're all human beings, and that emotion is in us. We just have to learn to manage it and use the risk management tools in place. Let's have a look here. Unfortunately, most brokers only offer a demo account if you open up a live account and deposit a minimum amount. Yes, they do, but if you do go in that situation, make sure that when you open, you learn that software before you go in and you trade properly. How much max percentage should I risk intraday? Intraday or on each position? Some people say 2% of your account. That's kind of the benchmark that people will say. 2% of your account. Never risk more than 2% of your account on any one trade. That way you're protected. And you're protected if you lose money, but you have to have these risk management tools in place. Okay. So that's, what number was that? That was number 5. Open a demo account, don't expect it to feel the same. Stick to your strategy. This doesn't need too much explaining, this one, but stick to your trading strategy. You had a trading strategy, you thought this was the market. It goes back to what I just said about your risk management as well. If you got a 3-to-1 trade on, if your risk reward is 3-to-1, don't then move your stop down as soon as it gets there and make it a evens trade. Just make it if you have a strategy, stick to it. It's very, very important to stick to that trading strategy. Let's move on. Number 7. Read the news. There are so many things that move the markets. If you trade oil, it's one of the biggest ones. But currently, right now, the current climate within the world is it gives you the best example of why you have to make sure you are up to date. Now, I don't just mean read the paper or read the BBC website or whatever it is. I mean, keep up to date with the most important things. And I tell you what the most useful thing for any trader is at the moment, for any retail trader is at the moment, is Twitter. So the fastest way to get any kind of information about the markets, any kind of information about trading, is to look at Twitter and have a successful list of traders on there, or traders or news agencies or whatever it may be, who are going to give you fast, up-to-date news as quickly as possible on economic releases, on absolutely anything. Make sure you get those. And there will be a lot of people who go, Twitter, no, I don't want to do Twitter either. I'm too old for Twitter, or I don't really know what Twitter is. I don't really know what it does. Well, learn what it does, and go and get it, and make sure that it works, and make sure you've got a list on there, because it is the most important thing. And I tell you, if you miss things because you're not up to date, Twitter is the way to keep up to date. And I'm not on a kickback from Twitter, but make sure you learn these things, and make sure you learn it. As we said, one of the previous points during the webinar was one of those was treat it like a business. You wouldn't just have a piece of software and go, you wouldn't get a piece of software and go, oh no, I'm too old for that. You'd learn how to use it. It's your business. Make sure you go in. So make sure you've got those that Twitter account, and make sure you've got a list of them. But keep an eye on everything else as well. Keep an eye on other things. But in terms of Twitter, obviously, the example I will give you is of course the GKFX, but any broker, whatever broker it is that you trade on, whatever broker it is that you trade on, we'll be looking at like keeping an eye on what's going on, and keeping an eye on what's moving things. I'll show you one thing right now. Market Insight. So this is Market Insight. This is not just a chance for me to plug what's going on, but Market Insight is the website that I was showing you before. It's where the recording will be of this, and it will show you exactly. We tweet on a daily basis exactly what's going on. We look at different articles. We look at all of the different points going on. We show you when the Dow breaks 20,000. But there are so many Twitter accounts like this. Yes, follow Market Insight. Follow myself as well. I am on there. But follow these places. They will give you all of the information and they will give it to you as and when it comes out. So follow those people. They are so important. Number 8. Analyze where you went wrong. Analyze the different points and different areas of where you went wrong in your trading. Never ever think that you are just in a situation where it's going to be it will just come good. My strategy will come good, or this will come good. Analyze where you went wrong. You may find that it's all of the trades that I do in the morning, as we said in the very first point. All of the trades that I do in the morning, I always lose money on. Maybe you don't like trading in the morning. Maybe you make bad decisions in the morning. Maybe you trade in the afternoon, trade in the evening, trade in the Asian session, whatever it may be. Look at your trades and say, even your winning trades. Don't just analyze where you went wrong. Analyze where you went right. What you've had successful trades. You placed 5 successful trades in a row. If they were successful, why were they successful? What did you do the same? What was it that you did? Analyze it and look at why you went wrong, where you went wrong, or why you were right and where you were right. Did you take, you can look at things like, did you take losses because you didn't follow your strategy properly? Did you press the wrong button on your trading platform? All of those different things. Just keep an eye on it. Keep an eye on all of these different areas and it will help you in the long run for sure.
I trust you are both well.
Okay, let's move on. Number 9.
You seem to renege on approval emails.
Markets change, so should you. You have a trading strategy. If it doesn't work, it doesn't work. If you don't make money, you don't make money. And I know previously we were talking about keep to your trading strategy, but don't do it blindly. Sometimes it doesn't work, sometimes it doesn't work. That's fine. That's absolutely fine. You can change. Trading is not about an ego. It's not about, I can't admit that I was wrong. You have to admit that you're wrong. That's exactly the same as the point of going back and saying you will lose money. You have to make sure you know how to lose money. That completely gets rid of your ego. The first time you trade anything and you lose money or you lose a substantial amount of money, your ego goes. You feel tiny. So you have to know that the markets will change. If it's something that's been going up forever, it's going to continue to go up. Yes, it potentially will do, but at one point it's going to turn around. Things that go up, they must come down. Levels that were important in the past will become important again in the future. These are all so important. They were so important, so you have to make sure. No holy grail, exactly right. Someone said there is no holy grail. You're absolutely right. There is no magic system. If you see something here and there that says there is a magic system, come to this course and I will make you make money. You will make money from here till the end of time. You will make money. Or this is our best system ever. No lose guarantee. Blah blah blah. It's all rubbish. None of it exists. There is no holy grail of trading. None of it at all. No holy grail.
What's that, Bob?
You make money, you make money. You lose money, you lose money. But there is no holy grail out there of trading.
Saying a one-man band, yeah? This is Ebony and Ivory now.
The last point is another important point. Yes, it's an incredibly important point. And it's don't hope for the best. Don't come in and place trades and hope for the best. Don't come in and say and place a bigger position than what you expected to place, or don't go, oh well, I didn't really analyse that, but let's go in and place the trade anyway. Sorry about the background noise. I sit on the trading desk, so it's incredibly loud. I apologise for that. That's one of the things that goes away. It can't go away, unfortunately. There is a bit of background noise, I agree, but that is the nature of the trading desk. So when you place your trades, don't just think, oh well, I haven't really got that much money, I'm going to do it anyway. It's a bit more than what I usually would risk on any of my trades, but I'm going to do it anyway. No, don't do that. Don't look for those. Don't look to do that. make sure you place your trades in the right way. Stick to that. Stick to that trading strategy. You wouldn't, as a business, you wouldn't go, oh, I haven't really got enough money to order that stock, but I'm going to do it anyway. You have to make sure that you keep these things in place and make sure that they're all that you don't ever just hope for the best and go and place a trade. And do you know what? Sometimes, and this is a key thing that has always been said, sometimes the most successful trade you ever do is the trade you choose not to place. You don't always have to be in the markets. You don't always have to be in the market, and that is key. You don't always have to have a trade on. Just because you have a trading account doesn't mean you always have to have a trade on, and that's one of the most important things to keep to remember. So that is that is 10 trading tips. That is 10 trading tips. I just want to highlight a couple of other things to you before I go. Let's hold on a second. I do want to highlight the Market Insight website. This is where you'll be able to see the recording of this webinar. It will go within here. We put all of these articles on a daily basis. There is a number of different things within this website as well. It's marketinsight.gkfx.com. It's got technical analysis, sentiments. We place a number of different stories about various different things. This is our colleague Sarah talking about Donald Trump, his tweets and building the wall and all of that information. We run daily webinars as well. We put them in every single morning at 8:30. We have a daily webinar. It's called the Daily Morning Briefing. The recordings of which go up on this on the website. This is exactly where this recording of this webinar will go as well. That will go on here later today. But you have to look out. But this is a daily morning briefing every single morning, not weekends obviously, but every single morning at 8:30 we do the daily morning briefing. So keep an eye out for that. Please sign up to that if you'd like to. If you would like to sign up for that, it's gkfx.co.uk. And you go to education and webinars, and in here you can see a drop down of all of these webinars that we have. So the next webinar, that was this morning's daily morning briefing. This is now our top 10 trading mistakes. And then also next week there is the start of our trading bootcamp. We've got introduction to owning an account, getting started with MT4. These are all webinars that are coming up. And then the daily morning briefing sandwiched in here every single day at 8:30. But guys, for now, thank you very much for your time. Thanks for listening. I will put the recording up on the website and look out for a link that will be sent to you all with the recording. So, but apart from that, guys, thank you very much for your time. The bootcamp, yes, the bootcamp is a webinar. The bootcamp is a webinar. All of these are webinars. So you go to gkfx.co.uk/webinar and you can view all of these and download them. YouTube channel will be on. YouTube channel is Market Insight, but the best place to see them at the moment, because our YouTube channel is still under construction, is the Market Insight website. So marketinsight.gkfx.com, and then video articles. Apart from that, guys, thank you very much for your time, and hope to see you on the daily morning briefing on Monday morning, where we talk about everything that's coming up for the week ahead and all of the trading on Monday. So thank you very much for your time.